Good morning, everybody. Mike Vacchi, Princetontrader.com, here for ntmarkets.com with your Thursday morning pre-market webcast. Okay, daily chart of the ES here. I left this up. We talked about this a little bit yesterday, and I was talking about it last night on my subscriber webcast. We talked about this area in here, the double fib area and the area of the 50-day moving average as a target area on a pullback. Well, here we are. So essentially, after the middle band was confirmed as resistance, which we had spoken about earlier this week, the bears were able to follow through, which is pretty impressive because they really haven't been able to follow through at all in 2013 and convert that middle band and make it be resistance and push lower. Now, let me take this triangle away. Okay, so we took the fibs off, we took the triangle away. What I'm looking at now is the red line. That's the 50-day exponential moving average. You know, a figure, an area that, as we were going up here, people start talking about, we're never going to see that again. We're off to 1696 and 1725 and points beyond. And, just remember this now while we're down on the lower band, okay? That when you're up on the upper band, at some point things get overdone and you come back to the lower band. Doesn't mean you can't ride the upper band for a while. You can trade in and out of that, and you should absolutely ride that trend. But don't get so enamored with one side or the other that, by the time we get back down to the lower band, now you're thinking about getting involved. Now you're thinking about selling. When what you need to be doing now is checking out the price action, seeing how it reacts with some key moving averages, and start thinking about getting long. I don't know if we're going to ride the lower Bollinger Band or not. The thing that will tell us that is if we keep rallying during the day and those rallies are sold and price keeps reaching back to the lower band. Just like when we rode the upper band here, we would get morning dips and then price would reach back up and touch that upper band. If we get rallies that are sold and price consistently reaches back to touch the upper band, then we'll be in a situation where we would be riding the lower band, and that would open up areas below us. The other tip-off that I like to use is, what is my 45-day pivot doing? The 45-day pivot comes in today at 1608.25, which is where the S&P closed yesterday. I put out on Twitter yesterday that we had finally come down and touched the 45-dayer, which was 1615.5. 1615.5, as the day played out, turned into resistance in the later part of the day. If the bears push below 1608 and 1608 starts to become resistance, then what you can see is the 45-day pivot on 2 consecutive days wanting to be resistance. If that's a pattern that persists, what you will see is price drift away, so in this case get lower than the 45-day pivot, which is the opposite of what has been happening during the course of 2013. Up here on 1682, I tweeted out that we were 60 handles above the 45-day pivot and that we had entered Crazy Town. Okay, that was, basically 70 handles ago. So the 45-day pivot now is dead center neutral. We're not overbought. We're not oversold. We're not oversold. We are neutral on a longer-term basis. So there's a lot of decisions to be made, and there's a lot of catalysts to help us make those. I mean, you've got the Bank of England. You've got the ECB that's coming out in about 15 minutes. You've got, you got the jobs report tomorrow. We've got claims today. There's a lot going on, and a lot of that is going to determine what we do for the next couple of weeks. So I will be doing a webcast tomorrow. It will be after the jobs report, so we can get an idea of what the range is going to be after the report. Please don't game the jobs report. That's a fantastic way to lose money. You don't know what the reaction is going to be to the report because you don't move billions of dollars, and neither do I. So what we do is we wait, we get the range, we fade it, and we trade it. So Everybody have a fantastic day. Watch that 08 level. Watch the 50-day exponential moving average, and see what we can do. I expect a little bit of a pop off the open, and then a dip down. The key is whether in midday when we get that rise, whether that's sold or not. Okay, fantastic day. Mike Vacchi, Princetontrader.com. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.